All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and leader of T3 Live's Pro Desk, a virtual trading floor. Before we get into any market-related discussions, just a quick disclosure here of Derrick's current positions as of our recording here today on Monday, September 29th. Happy Monday, Derrick. How is your trading day going so far?
It could be better. Little bit under the weather, and I'm very short. And the market gapped up this morning, so down some P&L on my swings. But it's interesting. Some of the shorts I'm in are very weak today, and are nicely right in my favor. Others are extremely strong and are nicely green against me. So there's still huge dispersion going on underneath the surface. Some names that are trading great, some names that are trading terrible, and no big picture resolution. So that's where we're at on this Monday morning.
All right. The title of our stream today being Pivotal Week, as it is a big week of data for the market, especially after the PCE last week. We got the inflation numbers, and now we're on to jobs. The big story of this week being jobs for this market and for the Fed, of course. We're going to get JOLTS tomorrow on Tuesday, the ADP employment report on Wednesday, then weekly jobless claims Thursday, and the big finale of the week, of course, being the NFP on Friday. How are you feeling about this market and, the importance of these pieces of data as we start this week?
Yeah, so it's a pivotal week for a lot of reasons. One is that, unlike last week, which was pretty devoid of any macro news, this week we've got some big expectations for what's going on, with the finale being on Friday, with the non-farm payrolls number. Assuming it happens, it might not happen if the government is shut down. Um, but also beyond that, this is the second week here of the most seasonally weak period of the year. The weakest 2 weeks historically of the year. This is the second week. And we did see some moderate weakness at certain points yesterday. We had like a whopping 1.5% pullback from highs to lows last week that just kind of tested the lower band of technical equilibrium for the market and tested the lower band of our uptrend, more or less. So this is a really important week, not just from a economic number perspective, but also from a technical perspective. And in fact, today is really important technically. How we close today is really important technically. The case I made to my team in the morning meeting was, if Bears are going to have a chance, they need to sell this gap up this morning to create a lower high on the daily. We bounced back. We put in a potential pivot low on Thursday. We bounced back a little bit further on Friday. I think we closed up 0.5%. And then we had a pretty nice gap up this morning. Not for any real important reason that I could see. Goldman Sachs increased their end of year target today, and I think that helped the market gap up a little bit. But the degree of the strength to me seemed almost uncalled for. So the question for today is, do bears use this? Do sellers use this gap up as an opportunity to sell more stock after the selling that they did last week with that little bit of a pullback, and create a bigger picture high or low, and then retest Thursday's low and potentially break it? If so, that's the beginning of what a technical topping process might actually look like, a lower high to a lower low. Or do we close on highs today? If we make new highs today, any chance of a pullback from this market looks like it's technically shot. Of course, you can always get an event, right? You can always get an event. You can always get an economic number that sends the market down, but I don't want to count on that. So, just generally speaking, based on the technicals, I actually think that how we close today is going to be really important. We had a little bit of a upside positioning squeeze off the open. We created a high, and now we've rolled down off those highs pretty well. Does the weakness started around 10:45 a.m. this morning continue to give us a close where the S&P closes flat or down today? Or do we round back up and close on highs? I think that that's a really important question here technically, that I'm not going to know the answer for another few hours. But it makes it an important week from a technical analysis perspective, from a seasonality perspective, and from an economic number perspective. So we'll see how it plays out. It should be another exciting one.
Just quickly, for everyone who is with us live, if you have any specific tickers or anything you'd like Derrick to take a look at for this market, go ahead and get those questions in now, and we'll get to them toward the end of our discussion here today. All right, Derrick, we saw some weakness in the market at the end of the week last week. What was it? Did we have three down sessions in a row? Right? Kind
Yeah,
of.
we had three down sessions in a row, but they were like 0.5% down, 0.2% down, 0.5%
Yeah,
down. It's not like we had a jump in realized
yeah.
volatility.
But
But
there was some red in the sea
there
of
is some red, and
green.
honestly, it's been so rare that we've had any red that my team and I were like, "Oh my god, it's crazy down day," and then it's like, okay, the S&P is down half a
Yeah.
percent, right? So,
Uh-huh.
the only thing I would note that was a little bit different about the selling that we did see last week was it was selling for the sake of selling, and I
Mm.
don't think that we've had like a no reason down day since the April bottom. The only time that we've ever had any down days, and there hasn't been very many of them at all since we actually bottomed in April, was because of an event. Like we went down one day because of the really bad employment number, right? We've seen some events that have taken the market down for like 1 to 2 days max. But last week was the first time it felt like a little bit of a character change where there was no news, there was no event, and the market just said, "Hey, we're a little bit tired. The selling was stronger than the buying, and we actually pulled back a little bit." So that's the one thing that I would note from last week's price action. But otherwise, having a couple days where we're remaining down 0.5% after the market went vertical from SPY 480 to SPY 657. Um, they're not going to get excited about there. There is still a major risk to the downside if it could actually trigger. There's a lot of like the systematic buying or selling, the risk is still very much to the downside. But the percentage that we saw last week was not enough to actually be able to trigger any of that. So, if we could sell a little bit, we could sell a lot. It is kind of the Scott Rubner quote that I keep going back to over and over and over again. He's over at Citadel now. Scott Rubner, he's the man. I love to read his research and his work. But that's a quote that came from his latest research report. If we can go down a little, we could go down a lot. And what he means by that is there are these big systematic selling triggers that are a major positioning risk to the market if they could ever trigger. But a 1.5% to the downside over 3 days isn't going to trigger it. It doesn't trigger any systematic selling. We didn't pull back far enough, and the realized volatility wasn't large enough. If you can show me a down 1.5 to down 3% day, like an individual day where you could go down that much, which again, I don't think it's asking a whole lot for the market to have a 1.5% to 2% down day when we just went from SPY 480 to SPY 670 in basically a straight vertical line higher. Whether it happens or not, I have no idea, or the timing of whether or not that happens, I have no idea. But if you could see that, it could trigger some larger systematic selling. So maybe one of the economic numbers this week could trigger that. And if that does, there's a knockoff effect where selling leads to more selling. But the little bit of the baby pullback we saw last week just was not it.
When it came to the weakness of the end of last week, like the CNBCs and all of that, they always try to like attribute it to something, or it's like due to a specific trend, etc. What I was seeing was that a specific weakness in the AI theme, Oracle, Nvidia. They were both particularly seeing weakness, but then strength happening today. Do you think the AI trend is here to stay in this market, or is it getting tired?
Well, that's the $10 million question, isn't it?
Mm-hmm.
That's what I have been looking for is this AI trade to get a little bit tired and deliver a little bit of a bigger pullback. And we did see a little bit of that last week, and then today it's just the complete and utter opposite. We saw the IWM be weak right off the open, and it seemed like the only thing that was green and was ripping the Nasdaq higher this morning was Nvidia. It was AMD. It was anything that's related to semiconductors or data storage or AI is what ripped this market higher this morning. And one of my teammates made a pretty astute observation and was like, man, if we could just get like these few names, these Nvidias to roll down today, this entire market looks like it's probably going to get smoked. And I tend to agree with that thought process, but at the same time, there's just this market has been so hallmarked by rotation that there's also a chance that if you do see those Nvidias roll back down again, that they just buy everything else. And there's been no situation where we see everything sunk together. And I think that's the biggest thing to look for is for correlations to increase and everything to move together. Honestly, even if they move together to the upside, I almost think that that could become a signal that the trend is ending because if everything starts moving together to the upside, it probably means that you're getting a continuation. We've already seen fits and spurts of it, but a continuation of the idea of vol up, spot up, where the market's moving higher while the VIX is moving higher, while volatility is moving higher. That could actually signify the beginning of the end. But one way or another, preferably as far as I'm concerned, on just happening on the way down, you need to see correlations increase to see any sort of a real sell-off happen in this market. And maybe that happens if we see Nvidia and those names roll down after their opening strength and close right today, which is a big if. Or maybe they sell those names back down and start buying everything back up. But that's the big thing I think to watch for.
Hmm. You mentioned, that this market just rotates, like nothing ever, all goes down at once. And that definitely seems to be the case. The AI trade is not trending. So then the small cap trade is trending. And then the small cap trade is not trending. So we're back to AI. It's like this constant churn that's happening. Does it make it hard to trade this market with the constant kind of flip flopping on what is the trend at the time?
I want to say yes and no at the same time is the answer to that
Okay.
question. So I think that correlations right now are tied with like the second lowest they've ever been in my trading career. Tied with a period in 2024. 2024 was the first time I ever saw this phenomenon that we've been seeing again recently, where it's like if the Qs tick higher, then the IWM is ticking down. If the IWM is ticking higher, then the Qs are ticking down. I saw it for the first time in my whole career in 2024. We've been seeing that again recently. The idea of dispersion, on the one hand, it can certainly make things trickier. On the other hand, it does create a lot of like stock picking opportunity and individual trading opportunity for stocks. And it's what makes it like so great to actually be a stock trader as opposed to, in my opinion, at least a futures trader who only trades indexes. Because the indexes, for the most part, have been boring as hell. Yeah, I mean, I guess it's not too hard if you're just long with leverage and you grind higher every single day, but the intraday price action at the index level for the most part has been very boring. But underneath the surface, the dispersion means that if you've got a stock that is 10% up, you need to have an equal weight of market cap of a different stock to be 10% down in order for the spies to stay flat. And that creates a stock picker's market. It creates a lot of opportunity on underneath the surface. It's a little bit tricky for my style personally because my style has always been a top-down approach where everything I do starts with the indexes. So I'm constantly staring, even right now as we're chatting, at the 5 minute, the spies, Qs, IWM, big picture down to small picture, starting with the daily chart, then all the way down to the 5 minute chart. But I'm constantly staring at the indexes to give me my cues for what to do on the smaller time frame. And that has not been necessarily the best thing to look at for individual stock trading right now because of dispersion. You could have, like I said, the Q's having a weak day today, but so you're looking at index level short signals, and there are things that are just ripping higher left and right because inherently Nvidia is down today, which means that seven other stocks of smaller market caps are up huge to make up for the fact that Nvidia is down, so that the S&P can stay flat. That's literally like what dispersion and rotation means, right? It means if the S&P stays roughly flat, but you can have if one stock has to be up a lot and something else by nature has to be down a lot in order to keep the S&P at unchanged. So that is the environment that we've been in. It creates great stock pickers opportunity, but if you're index focused, it's probably terrible. Or for me, it's a little bit tricky just taking a top down approach and wanting to do everything based off the indexes before I do it in any individual stocks.
being in a market that is kind of tough for your individual style of trading. Of course, traders adapt over time and you change the way you do things, etc. Are you making any adjustments to your personal style in this environment so that you're not on the wrong side?
Um, that's a great
Or are you just
question.
putting on less? Are you putting on less because,
No,
you know,
so
the trades
honestly,
aren't there?
the genuinely honest answer to both those questions is no. I'm not really doing anything different, and no, I'm not putting less size on. I mean,
Hmm.
I guess that's not entirely true. What I am doing different is I'm really studying heavily where the relative strength and relative weakness is, and
Uh-huh.
um, this is an environment where I think, like, let's say you want to be short. You either want to be short something that's super relatively weak for continuation, or you want to be short something that's super extended and not anything that's in the middle. And then how you're going to get paid depends on how the market rotates. If we do a new rotation where the stuff that was strong pulls back, then shorting the extension is going to work really well. If we don't do a new rotation, then the things that are already relatively weak will continue to sell down and you'll get paid by what's relatively weak. So when I've been trying to flip things, I've been trying to have bits of both. I've been trying to flip things that I view as having like heavy upside extension for if rotation flips, if the IWM gets weaker and the Qs get stronger or whatever, then I can make money on the technical pullback of things that are extended. Or if rotation doesn't flip again, I get paid based on what's relatively weak. What has paid me better, I can tell you so far at least, has been shorting relative weakness compared to shorting extension, because it seems like the rotation trade hasn't changed enough yet, and the things that are extended just continue to get more extended, and that's not been paying as well as the things that are weak staying weak and continuing to push further.
All right. You mentioned it briefly that we have a looming possibility of a government shutdown. Government will run out of money tomorrow, midnight Eastern time, so technically Wednesday morning, if a deal is not reached. Could impact things like what the market is looking for, the jobs report this Friday, other data points, and of course, federal jobs, uh, Congress included. Um, so think the market's really concerned about the threat of a government shutdown, or is this another government shutdown's coming, and we'll have a last minute deal, and the market knows that. How do you think
I
the
mean,
market's going
for the
to?
most part, clearly the market doesn't care. I can tell you that because we're
Yeah.
a hair away from all-time highs. I've traded through several government shutdowns in the past. One in the previous Trump administration, one under the Obama administration. And what I can tell you is that, from the perspective of the economy, from the perspective of the stock market, these tend to really not matter. You do lose some GDP upfront, but you tend to make that back on the back end. Could this be different this time? And if so, what could be different this time? I think there's two things to note. One is that the Trump administration is talking about taking some of the furloughed government employees, because that's what happens if you're a government employee and the government shuts down. You just stop getting paid. And if you're an essential worker for the government, you have to continue to work, but you don't get paid. Um, so they're talking about just fully firing some of the people instead of just furloughing them. So that could have an impact on the economy. Just more firings. The other thing to pay attention to, though, the thing that's most interesting about this will be the lack of economic data. I think more so than any impact on the economy of a government shutdown, it'll be the fact that we won't get the non-farm payrolls number on Friday. I actually read an analyst note over the weekend that made a bullish case for us not getting our economic data. And I'll just repeat it. I'm not getting down in my brain on how accurate this actually is. I thought it was a really interesting case, so it's worth mentioning. Right now, the Fed is pricing in, or the market's pricing in that the Fed is going to just cut and cut and cut and cut. We got 2 more cuts coming this year. We got a couple more cuts coming in the beginning of 2026. So we are like fully pricing in maximum cuts. I guess you could say there's a potential that we could start pricing in 50 basis point cuts. I really don't think that would happen. So for the most part, all these economic numbers could do is reduce the probability of cuts. And if you don't get them, then most likely the Fed just stays on their current course, which is to cut in October, cut in December, cut the beginning of next year. Excuse me. So that's actually the bulk case that you can make, is that you're not getting the data that could potentially slow down cuts. Um, I don't know. I don't know. We'll see what happens. Hopefully, the government continues to function for the sake of our great country, and hopefully, hardworking government employees continue to get paid for their services, and that's it. That's all I got.
If a government shutdown were to happen tomorrow night, what would be your prediction for the open on Wednesday morning?
What I had seen earlier in my career, was that they would sell the market down into the potential of the government shutdown and then actually buy the
Right.
market up after the shutdown occurs. I don't see that price action acting this
Mhm.
way this time. Because like I said, we really haven't gone down unless you want to call the 1.5% down move from last week front running of selling in front of the shutdown, but that's already almost erased as of this
Yeah,
morning.
no.
So
Mhm.
I genuinely don't know. I think that the impact on the market's going to be negligible, to be honest. I would love to be on here and be like, that's going to bring the market down, but I don't feel confident in saying that.
Yeah. Mhm. All right, before, we get to any ideas that you currently like, we got a question from It's wants you to give some analysis on Apple. If you wanna
Sure.
do some screen sharing, we can look at the chart.
Yeah, I can do that. Apple was a name that we reviewed in my team's morning meeting this morning. Let me pull up the screen share for you. Bam, there it is. SPY's bleeding out here a
Yep.
little bit, testing some intraday support. Let's see if that breaks. He was kind of doing the same, bleeding out, staying a little bit weak. Before I dive into Apple, we had noted the importance of this 10:05 a.m. low this morning. We said if the market can lose that, it's probably the end of the opening positioning squeeze and we roll down and have weakness. It's been exactly what's been happening. Now the question is, can we get back to 662 in these SPYs and or close negative on the day? I do think it's possible. We're staying really heavy ever since the opening positioning squeeze ended. But going on full, so um Apple right now, based on the daily chart, is one of my favorite names to be long. So let me take an Apple for a second, then I'm going to make a broader point. Um, However, we noted two things in the morning meeting about it. One, that it was operating relatively weak, which you can still see that. Apple's down 0.85% right now, with the Qs up 0.45%. So Apple's relatively weak, and that today is not the day to buy it. So I love bull flags. Love a good bull flag pattern. That's what Apple is right now. However, what I've really learned over the course of my trading career is, so this blue line here is the ADMA. That's what I consider to be the upper band of equilibrium. The red is the 21. If you have a bull flag on any time frame for any stock and the ADMA hasn't really caught up to the base of that flag yet, and the stock is starting to break out without the ADMA catching up, you have a very, very high probability of a bull flag failure. Uh, I would say if the ADMA hasn't caught up to the base of the bull flag and the stock is trying to break out of that bull flag, you probably have a higher probability of failure than the pattern itself actually working. Equilibrium has to catch up to the base. Now, the ADMA in Apple has basically finally just about caught up. I would argue that it might need one more day. We also do want to pay attention when you have so great of a move that the 8 and 21 EMA spread really, really widens. When that spread really widens, which is what happened here in Apple, a lot of times the ADMA catching up isn't quite enough. You need the 21 to catch up a little bit further and for those moving averages to tighten a little bit. Because remember, markets work in periods of expansion and consolidation over time. A bull flag is a pattern of consolidation. If you can get those moving averages to tighten a little bit and that ADMA to fully catch up, that acts as the springboard for bull flag continuation. So when I analyzed Apple in my team's morning meeting this morning, I was like, beautiful bull flag, obviously very relatively strong. Bigger picture, if I have to be long a Mag 7 stock, this is one that I want to be long. However, it just doesn't seem like it's time yet. So that's kind of the same thought process. I just don't think it's time yet. And the relative weakness that the stock is showing today is a little bit concerning, especially if the market continues the roll down that we're seeing right now and doesn't close well. So I'd be a little bit patient on it. But overall, it's fantastic. We looked at all of the Mag 7 stocks with my team in the morning meeting today. This is the broader point that I wanted to make. And what's really interesting about the Mag 7 names is that they don't all look the same. Some of them look pretty darn bullish, some of them look pretty darn bearish, and a few of them look very, very meh, very, very neutral. And it's almost unusual to see that. I feel like usually when you're looking at one really strong Mag 7 stock, you're looking at 6 out of 7 that look fantastic. And it's not that way at all right now. Apple looks great overall. Google looks great overall with this potential pivot low off this 21 EMA. Tesla looks great overall, though. Notably, if this closes below 430, you might have a bull flag failure in this one as well. But overall, Tesla looks great. But I know Nvidia, if it continues to hold above 180, there's some really important closes today. Whether Nvidia closes above or below 180 is really important. Whether Tesla closes above or below 440 is really important. But Nvidia above 180, this thing's starting to look phenomenal. But then you look at Amazon, and Amazon looks terrible. Amazon looks really weak here. If you look at AVGO, which they call the Mag 8, like the 8th stock, this AVGO does not look good to me here at all. Relatively weak compared to the semiconductors. It looks like it wants to get below 330. It looks like it wants to get into this gap. And then when you look at like Microsoft and Meta, these are the ones that look very like meh to me. Very, very neutral, maybe even bearish neutral, where they're very range bound here and not giving any great continuation. So it's like, again, I got like an Amazon that looks like really bearish to me. You could argue that Meta looks bearish to neutral, Microsoft looks really neutral, but then I've got Apple that looks great. I got Tesla that looks great. I got Nvidia that looks great. I got AVGO that looks bad. These names are all over the place. And a lot of times that's not how the Mag 7 stocks look. They all look the same. They all look like the Qs, but they don't right now. And I think that's a really notable case for the potential of the market to grind down if you begin to see more of these names begin to fail. If this Apple bull flag really begins to, let's say, turn into a failure, or the Tesla flag into a real failure, or you get the close below 180 for some reason in Nvidia today, this thing looks like another potential breakout failure. And then maybe that leads to a little bit more of like a lower high on the spies and Qs to like a grind lower as opposed to an acceleration lower. If you're going to get an acceleration lower in the market, you need a VIX spike, and that probably requires an event. Or you need the market to grind lower until it hits certain systematic trigger points, and then that actually creates a spike lower. So sometimes what you see with market tops is a beginning of like a rollover, and then the rollover accelerates. That's exactly what happens. So we're pointing out some potential plausible scenarios based on how we close today. If we were to close right here, right now, I wouldn't call it a failure, but it's definitely not a good candle if we were to close on lows. So, like I think the name of the Saturday was like pivot or something like that, or pivot week. And I think that this just goes to tell you, I think, from a technical perspective, just how pivotal this week is on top of all the economic numbers we're going to be getting.
Mhm. All right, so you went through some of the Mag 7 names and what those charts look like. Any other charts that are on your radar as a trader this week? Or things you're
Uh,
looking at, for specific closes at specific levels to kind of get an idea of where you could be long or short ending?
So we just covered a lot of the major names that I'm looking for. The biggest thing I'm looking for
Yeah.
though is market right now. I'm just super focused on the indexes to see if we get this potential lower high, which can happen, especially with the week close today. I would love to see us close negative at least in the SPY, if not both the SPY and the Qs today, to give me some better technical confirmation that this is the potential lower high. Though true technical confirmation doesn't happen until we get below Thursday's low. Thursday's low is also a really important support level because it's low from the Fed day. So uh, we closed today for a lower high, very notable. The new low kind of cinches it in. That happens below 655. So biggest thing I'm paying attention to is the market. After that, it's the names that we just discussed. It's his Mag 7 stocks. I still like the idea of being long energy. I know it's really weak today because OPEC announced that they're going to increase supplies further, which is hitting down oil big and it's hitting down XLE. But if I was going to be long somewhere, I would look to be long like energy and healthcare, not really the AI trade. And then, I'm looking at SMCI as a relatively weak daily chart, semiconductor as well. And I'm continuing to watch some of these high flying names that I just think are moving in a way that's unsustainable. SanDisk up like another 17% today, inexplicably for no real reason, no real news that I'm aware of. WDC up huge. At least this one got a price target increase. But see how they close. If you look at STX, well, I've been putting all three of these names in the same kind of category. STX is set to close with a nasty upside tail, but SanDisk at this point is set to close on highs. So the intraday handle looks almost opposite of one another, but for the most part, those names have been trading very much together. Those are on the extension list. Palantir has been kind of on my relative weakness list, even though the stock has improved a lot here. It's still not making all-time highs when the market's been making all-time highs. So if this Palantir could really get back below 170, I think that the thing is shot and you could press this short. You might even be able to begin to press it short below like 174, that you'd be front running the real break lower. So yeah, I mean, biggest focus right now is the market in the VIX in conjunction with the market. You see the VIX is back above 16 as we're having this conversation. Let's see if we close weak today.
All right. All right, Derrick. Derrick's a real trader, so I want to let him get back to that. But again, a big week coming with hopefully ending with a jobs report as long as we don't have a government shutdown. So again, you go to t3live.com/do live to get Derrick's free ebook. It's all about prop trading, the benefits of prop trading, how you can work with him yourself. And Derrick, have a great trading week. I hope you get some exciting catalysts for some
Thanks, Retta. Talk to you soon.
actual trades. All right, have a good one.